Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 7:03 here in the middle part of the country. It's March 25th, 2021. Here's your morning jog through the economic headlines of the world. Here in the U.S., AstraZeneca revised its COVID vaccine data with a lower efficacy rate. They moved it down from 79% down to 76%, fairly close. Remember, earlier in the week, the independent third-party council that reviews vaccine trials here in the U.S. said, hey, we think you're sort of cherry-picking the data. We want you to redo your homework. They went back, redid their homework, and still have a fairly good vaccine. We'll see if it gets approved by the FDA here in the coming weeks. It sure would be nice to have another tool in our arsenal to fight COVID. The Suez Canal is still blocked. The Ever Given, it's about 20,000 containers on that ship. Now port authorities say it could take weeks to clear the ship. Yesterday, for about 3 hours, they said, hey, we're refloating it. Turns out that wasn't entirely accurate, and now they are completely suspending traffic through the Suez Canal on a go-forward basis. Big story for global trade. If this goes on for weeks, it will impact supply chains very severely, will impact global GDP growth, like the global economy needed another thing to slow it down. Now, Suez Canal blocked on an ongoing, indefinite basis. Global oil is down yet again today as the Chinese really refuse to buy any May cargoes. Remember, Saudi's exporting quite a bit less here in May. They're still voluntarily cutting production. We're just not seeing a buyers and sellers coming to an agreement right now. Saudi trying to push the price up on a sustained basis. China saying, hey, we bought a bunch of oil when oil prices briefly dropped negative last year. Of course, they never paid negative. They paid a little bit more than that, but they are burning what they bought at low prices last year and are fine to not take those cargoes on a go-forward basis. It'll be interesting to see if OPEC continues to curb production with prices on such shaky ground on their meeting next week. Tech CEOs are in Washington today to discuss moderating their own platforms. We've got the CEO of Facebook, CEO of Google testifying. Facebook, of course, has been very free market in sort of their approach. We're going to provide the platform. Folks can moderate themselves. Google's been a little bit more, and Twitter's certainly much more hard line on what they're going to allow on their platform. Certainly seems like the Democrats now with control of Congress, the White House, are looking to regulate big tech quite a bit more. And lastly, this is a good headline for CNBC, the Super Bowl tax reform. Both chambers of Congress are going to start talking about taxes in the upcoming weeks. Biden plan, I believe, calls for about a 28% corporate tax rate, significantly increasing the taxes on folks making over $400,000. Be interesting to see how those negotiations go. That's what I had here for this morning. If you want some additional information throughout the day, feel free to follow me on Twitter. It's OKCCFACFP. Until then, I'm out.